Good morning, good afternoon, good evening. Welcome back for another video. Today I want to talk about statements made by Fed Governor Brainard and its effect on the crypto markets mostly. You can see also similar effects on the stock market. And if you like this content, smash up that like button, subscribe to the channel, and leave a comment in the comment section. So I want to read this article. I'm not going to read every single line of this article, but I want to read some major points because Fed Chair Brainard made some comments yesterday that have caused a little bit of fear to enter the market. Is it the similar amount of fear that Jerome Powell brought at the end of November, early December? I would say not. I would say that we're not going to see some kind of major long liquidation, some kind of flash crash, especially given how many people were long in November in comparison to now. It's not even close of a comparison. And so I don't think anything crazy to the downside is going to happen as a result of this, but it does increase the fleeing to the US dollar. The US dollar index is at new highs and stocks are tumbling as a result. Crypto market is not looking all that great. So let's take a look at that. Let's go ahead and dive right in. And if you like this content, smash up that like button, leave a comment in the comment section, and subscribe to the channel. So Fed Governor Brainard said Tuesday the central bank could start reducing its balance sheet, its $9 trillion balance sheet, as soon as May. So the May Fed meeting going to be a big one, apparently, and would be doing so, quote, at a rapid pace. I think those three words right there, a rapid pace, are the big ones that kind of spooked people. She also indicated that interest rate hikes could come at a more aggressive pace than the typical increments of 0.25 percentage point, 25 basis points. I feel so cool when I say basis points, but anyway. Fed Reserve Governor Brainard, who normally favors loose policy and low rates, said Tuesday the central bank needs to act quickly and aggressively to drive down inflation, which is funny because let me tell you what's going to happen with inflation. We are probably going to have higher CPI numbers next CPI meeting or minutes. CPI report next week is probably going to give us higher numbers than last month and higher numbers than previously before. But what I'm expecting is that those CPI numbers are going to beat expectations, and that those numbers are going to peak no matter what the Fed does. Those numbers are probably going to peak sometime in May and June and then start moving back down. That is just a part of the market dynamics right now. And so to act quickly and to aggressively drive down inflation, it's like, it's going to go back down. It's not going to go back down to 2. Those days are over, I believe, but maybe settle somewhere around 4% annual inflation. And that'll be the new norm. And that'll be the thing that they're shilling on us is, hey, 4's fine. 4's just fine. So whatever. That's why I like Bitcoin. In a speech written for Minneapolis Fed discussion, Brainard said policy tightening will include a speedy reduction in the balance sheet and a steady pace of interest rate increases. Her comments indicated that rate moves could be higher than the traditional increments of 0.25 percentage points. We already talked about that. Inflation is much too high and is subject to upside risks. Okay, yes, inflation is high. And if I am a stereotypical Fed chair, if I have anything to do with the Fed Reserve, I am going to be beating that drum. So let's raise rates. Let's tighten quantitative easing. And all right, while we're talking right now, let me just run to Bitcoin because, all right, it's 2:00 Eastern time, just turned 2:01. We saw a wick below the 21-week EMA. And so now what's happening is the March FOMC meeting minutes have been released. And so here's basically what I was going to say about Fed Chair Brainard's statements versus the price action is, basically she made those statements yesterday. And we saw a very clear dump in the price. And that was going to be, this is right around the time when I thought that the fear would be kind of finished. That we would hopefully start bouncing back above the bull market support band, the 21-week EMA, the 20-week SMA. And right now, hey, minutes are being released and we're seeing the price of Bitcoin go up. Now, that doesn't mean it's going to go up forever, but it is one of these things that I think we're going to hold. I think we're going to hold these key levels. I think we're going to hold these moving averages, and we're going to stay above the bull market support band. And so therefore I will stay bullish. And I hate to be talking in real time like this. I had plans, things to say. So let me bounce back. One other thing I wanted to talk about with this article The FOMC will continue tightening monetary policy methodically through a series of rate increases by starting to reduce the balance sheet at a rapid pace as soon as our May meeting, she said. So as soon as our May meeting, that may be just another thing, just like the March Fed meeting where it was like, sell the fear, but buy the event. That may be something similar. Given that the recovery has been considerably stronger and faster than the previous cycle, I expect the balance sheet to shrink considerably more rapidly than the previous recovery, with significantly larger caps in a much shorter period to phase the maximum caps compared to 2017 to 2019. So back then, the Fed allowed $50 billion in proceeds to roll off each month. So think about that, $9 trillion, $50 billion in 2017 to 2019, $50 billion was rolling off each month. That is an insignificant amount. What do they do this time? Like, I don't know, 100 billion each month, whatever it is. So be it. So anyway, the moves are in response to the inflation running at its fastest pace in 40 years, well above the Fed's 2% target. Market expectations are for rate increases each of the remaining 6 meetings this year. That's interesting, possibly totaling 2.5 percentage points overall. And so that is much more than a quarterly increase. So this is what this article is saying that the market is pricing in 0.25% every meeting, April, May, June, July, August, September, et cetera, et cetera. That is what the market has priced in. There's 8 more months left in the year, 9 more months, excuse me. There's 9 more months left in the year. That brings us to 2% overall. And so I've been talking about this on my Discord. I would very strongly recommend that you all join my Discord. I've been much more active there, general chat. I am posting my trades, doing pretty well so far, on the trades that I've posted at least. I mean, it's every trade that I'm in. I'm not hiding any trades or anything like that. But as I was talking with my friend Ninja Milk here, one thing that came up is, all right, the Fed, they're going to raise rates, but remember, midterm elections this year, the White House currently wants inflation to be under control, but as we get closer to November, I think the greater pressure will be for people to feel like the economy is strong or at least on an upswing. So the only way that happens is for the Fed to slow down on quantitative tightening and rate hikes. I have been saying for quite a while now that I believe the Fed will turn dovish, and I believe that it's going to happen in 2022. The market currently has priced in, 9 rate hikes for 2022. And so as soon as they turn dovish, what's going to happen? I think we're going to see some rockets. And that'll all be, do I believe that we're going to see a recession? Yes. Do I believe that things are going to get pretty difficult and that stocks and cryptos will go down at some point? Yes. The question is when. In my opinion, it's not 2022. I really don't think so. It takes time for rate hikes to have a real effect on the market. And so I'm not going to go there, but late 2018, early 2019. Remember, late 2018, December 2018, the price of Bitcoin went down to $3,000. That marked the bear market bottom. The COVID crash was just a blip, but that marked the bear market bottom. We kind of slowly climbed out of there. And then late January, early February, we went off like a rocket. And so something I just forgot it never really entered my mind as something to talk about with that. What caused us there was a catalyst that caused us to shoot off like a rocket to go from $3,000 to $14,000 in a span of 6 months. And that was the Fed turning dovish. Right at that time, that's what happened. Bitcoin shot off. The rest of the crypto market shot off. Didn't go back to its 2017 highs and early 2018 highs, but it still shot pretty high. And so at some point, again, I am one of those people. This is the field that I've worked in. I was a mortgage loan originator. I was in mortgages. My life depended on interest rates. I studied it like crazy. And if the Fed doesn't turn dovish, they're going to do something that they haven't done in 40 years. And given the fact that I believe that inflation will go back down despite what they do, that means, in my opinion, that they'll be like, okay, we can lower rates again. We can lower rates again because inflation is just fine. And so All right, NASDAQ falls 2% as route deep into ahead of Fed minutes. Okay, Fed minutes came out at 2 p.m. Eastern Time, 1800 GMT, so don't need to talk about necessarily the contents of this article as much. So something else I wanted to talk about is, I might have to save this for another time, but just look at the spreadsheet. Look, not a spreadsheet, just a Google Doc that I put together, top 50 non-stable coin cryptos. And if you can look at it, if you're reading it, what do you see? A lot of the same wording. If you're listening to me and you're not looking at your screen right now, you can see these words: below at resistance, below at resistance, below at resistance, below at resistance. I looked at the top 50 non-stable coin cryptocurrencies. And what I found out, this happened during my live stream yesterday. I went live on TikTok. What I noticed is that, people were asking me about, what about XLM? What about VeChain? What about whatever? What do we have here? Internet Computer, Filecoin, HBAR, Elrond. And what I noticed about those cryptocurrencies is that they were right below, like literally, like touching. Like every one of them had wicked above, but then got right below either the 21-week EMA or the 20-week SMA. And so is that going to be a point of resistance, or are we on the brink of seeing new highs? New highs with, not new highs, but are we on the brink of seeing a lot of these alts, cross over that resistance, turn it into support, and then break out? We'll see. I mean, the Fed certainly threw a wrench into things. I'm not going to, should I say certainly threw a wrench? We've known about this for a while, which makes me think, this shouldn't have nearly as much of an effect as Jerome Powell's statements did in late November and early December. So we will see. The primary concern right now for me is, are we going to hold the bull market support band? If yes, then yeah, I believe, I made a video on NEAR yesterday, giving it a $28 price target. I believe that NEAR will eventually get to a $28 price target. If Bitcoin doesn't hold its bull market support band, then all bets are off. I very much do not believe that NEAR will get to $28, at least short term. That was like a month or two projection there. But Luna will do well because DXY is pumping. Luna is correlated to DXY. But otherwise, other things I've talked about, it's like all bets are off. I'll probably, if we don't hold this, I'll probably be opening some shorts on some altcoins. But anyway, let's take a look at the cryptocurrency market. So everything is down except I see a little bit of green for Zilliqa, but Zilliqa has been bleeding red over the last few days. So it would make sense for it to have some kind of a relief rally. Everything, it's a red day. It happens. And let's just see if Bitcoin can hold its bull market support band. And if so, then great. This will have been a fantastic test. And maybe we can bounce back up to the 200-day simple moving average at $48,000 and then test that again. And then, if you watch the video, the video that I made a couple days ago, what I would prefer is a slow and steady climb, but we've got to see. And again, this is in real time. So what did we see after the Fed released their minutes? We saw a move up to $44,200 and then a move down. That tends to happen sometimes, especially with CPI numbers being released. And that makes me a little bit nervous that we're not going to hold, but we'll see. We'll see. So yeah, it is what it is. We will be back above the bull market support band at some point. And I don't think it's going to take as long as it took, from December 4th until 2 weeks ago. And if we got to go back down, we got to go back down. So be it. But that is all I have for today. I hope you have a wonderful day, a wonderful rest of your week. Join my Discord because I will be more in depth with my trades there. And I will probably be shorting some things if we don't hold the bull market support band. But have a wonderful day, wonderful rest of your week. And I will most certainly be seeing you in another video. Peace.